we're looking at Bitcoin as, the technology as well. It is a financial superhighway, a public good. And so we think educating and offering access to as many people as possible in a less friction-filled way.
이제 세상이 비트코인을 바라보는 시각은 공공재이자 슈퍼하이웨이이며 가능한 많은 사람들에게 비트코인을 교육하고 접근성을 제공하는 것이 중요하다고 주장하고 있는 인물은 돈나무 언니로 유명한 아크인베스트먼트의 CEO 캐시우드입니다. 캐시우드는 이번 비트코인 현물 ETF 승인에 지대한 영향력을 끼쳤고 현재도 크립토 시장의 상징적인 인물이자 비트코인 투자의 선구자인 만큼 그녀가 생각하는 향후 가상자산 시장의 방향성과 비트코인이라는 혁신 자산의 전망에 대한 그녀의 디테일한 인사이트에 대해서 함께 들어보도록 하겠습니다.
Let's start the conversation with your current assessment of the Bitcoin ETFs. You guys were the first fund, I believe, on Wall Street to buy into the Grayscale GBTC fund, but now we have ETFs, and so how do you think it's going?
I think by all accounts, is going very well. In the aggregate, we're thrilled with our positioning and actually somewhat humbled, I must say. So I think we're number 3 if you take out Grayscale. So I'm very happy with that. Very happy with the reception. And I think the interesting thing that happened when you have 11 ETFs approved at the same time, that's never happened before, the amount of energy and research communication that has gone out around this spot Bitcoin ETF opportunity, has been unmatched. And I think it's done a great service for Bitcoin and digital assets generally, because this is just the beginning of a completely new asset class.
One of the reasons that people are excited is because Bitcoin's price is going up. Some of that is because there's a lot of people going into the Bitcoin ETFs, and so demand is outstripping supply. But there's also a number of other macro factors. There's questions around interest rates, around inflation, about a potential recession incoming. How do you evaluate Bitcoin in light of these potential questions? And also, why are people buying the ETFs? Is it just the ETF alone, or are there macro factors that are driving them to buy it?
Well, as I just mentioned, I think there's been a lot of communication about what Bitcoin actually is in this new asset class, leading the charge. I know that our research team, I know Yassine is there with you, has done an amazing job, not only in the last 6 months or year, but we've had research extending back to 2014 and our first white paper in 2015 when we took our first exposure. And so we've been singing the praises of Bitcoin for a long time as a new asset class. So that's a start. But I do think there are some macro factors. We're very focused on what's going on in the emerging markets right now. I think with time, many more people will understand that the Fed, with a 24-fold increase in interest rates over little more than a year's time, has absolutely shocked the financial system around the world. Now, many people are looking at very short-term lagging economic indicators here in the United States, primarily because the Fed is doing that. But if you look at other signals that not all is well in the world, I know Mike mentioned the Naira, the Nigerian Naira, which has devalued by 2/3 since last June. Now, Nigeria is one of the wealthiest countries, oil-rich in Africa. And with a new administration that's become very business-friendly, I think they thought they could let the currency float. And they found out, that it has been very painful from a purchasing power point of view and from a wealth point of view. We've seen the same in Egypt, that the Egyptian devaluation was 40% at the beginning of March. So I think that there's a bit of a risk-off reason for owning Bitcoin emanating from the emerging markets. We've seen in Argentina with the new administration there. I think the currency, they made official what the black market already knew, that the currency was worth half of what it was reportedly worth. So I think we're getting those warning signals. I also think, yesterday we got the Swiss bank cutting rates, which was a big surprise. The UK turning a little more dovish. The Fed now a little more dovish. Why? What are they seeing out there? And so many people think of Bitcoin as a risk-on asset, and it certainly has traded like that over time. But we have been looking at it as both risk-on and risk-off. And I can tell you, when we first learned that in 2015, when we took our first position in Bitcoin via GBTC, Bitcoin was about $250. And many people were making fun of us at the time, thinking, oh, they're new. We had just started our funds in October of 14. Oh, they're new. They're just trying to gain attention. This is a marketing gimmick. And so we were really on the spot. First of all, we had done a lot of research. We didn't think, we thought there was real investment merit, but we were watching like a hawk its moves. Back then, Greece was threatening to leave the European Union. And every time there was a flare up, and a fear of another European sovereign debt crisis, Bitcoin inched up. And so we've been looking at it as both a risk on and a risk off asset for quite some time. And the regional bank crisis last year kind of confirmed that point of view, that here Bitcoin more than doubled as regional banks were imploding. So I think many people are beginning to say, as they learn what this is, wow, could it be both a risk on and a risk off asset? We think so.
Now, one of the interesting things is individuals and maybe family offices have been really excited about Bitcoin being outside of the system, kind of this alarm system that you're talking about with issues within the traditional financial system or the banking system. But what happens if Wall Street becomes a bigger player within Bitcoin? It's kind of pulling Bitcoin into the system to some degree. And so does that change the evaluation you have of the asset or how you think the industry actually develops in the coming years?
Well, it's certainly going to be adding more liquidity. I think it's legitimizing this new asset class. So that's a very good thing. I think bringing in a new class of investor is important. And, one of the reasons that we wanted to do a Bitcoin ETF, or a spot Bitcoin ETF, even after we decided that it would probably be very low fee, given the way the competition was going to evolve, was, we're looking at Bitcoin as, the technology as well. It is, a financial superhighway, a public good. And so we think educating and offering access to as many people as possible in a less friction-filled way. I mean, many people just didn't want to deal with wallets and so forth is going to, in hindsight, when history is written, I think is going to become a very important moment in time.
Now, you mentioned that a lot more liquidity will lead to or help in price discovery. There's a school of thought that as these large pools of capital come in and the asset gets larger, volatility will dampen and returns will actually go down. How do you think about the asymmetric return profile of Bitcoin historically, and will that continue in the future, or does that change now that there's new players and larger pools of capital?
Well, asymmetric, there aren't many assets out there that I think can claim that they're both risk on and risk off. So for that reason, we think that the return profile is going to be certainly relative to anything else out there. And if you look at Bitcoin's compound annual rate of return, it's 44% over that time versus I think it's 4.5% for all other assets combined. So we think that superior returns are going to be there. This is the beginning. This is just the beginning of this new asset class. And the volatility is coming down. Are we going to have the same returns from peak to trough going forward? Perhaps not. But we've come a long way, and we still think we have miles to go.
Are you all doing anything different since you first bought, or has it pretty much been Bitcoin is good, ARK is buying, holding, and that's the strategy when it comes to Bitcoin specifically?
Since we were looking for exposure very early on, and the first exposure we could find was GBTC. But then as time went on, of course, public companies became available with some exposure to Bitcoin. Actually, we had done our second white paper with Coinbase. So, we were casting far and wide for exposure to Bitcoin, and we didn't have a private fund at the time like we do now. now. So Coinbase is now obviously a big part of our portfolio, Square as well, Robinhood. So we're looking for the companies that could potentially have that digital wallet that is probably going to become a winner take most opportunity. And so you've got Coinbase coming at it from the crypto angle. You've got Robinhood coming at it from, well, starting with equities and options, and Square with Cash App. So yes, we're doing that. We also have launched some futures funds. I think that's pretty well known, 3 of which are actively managed. So one is Bitcoin Cash, one is Bitcoin ETH, and these are all futures. And then one is Bitcoin and all of these digital wallet opportunities potentially. And then we also have private funds, a cryptocurrency fund, a crypto revolutions fund, which will take us far and beyond Bitcoin. So we're doing a lot and getting more and more excited about it.